Okay. Hello, everyone. Trust you guys are
Yeah,
doing great. My name is David Alog, but I'm the CEO at Suavally Markets. And with me here, even though we can't get his video up, is Joshua Ofomaja,
yeah,
who's
okay.
CEO here at Suavally Markets. So we're excited to bring this to you to be um, at the start of the new week. Um, This is the weekly opportunity hunt at Suavely, where we essentially look at different assets and try to look at where we can get opportunity to the new week. So we've got a number of different assets. We're going to look at a couple of currencies. We're going to look at some indices. We might be able to touch on a few crypto CFDs as well. And I think we're going to look at metal. Joshua's got some interesting views on platinum, I think. Yeah. So,
Yeah,
I mean, without wasting a lot of time, I think we should just get into it because we only have about 30 minutes. We are about to do this to be able to. Guys, if you have any comments, if you have any contributions, you're always welcome. Just to inform you that we have a Telegram channel that you can put feedbacks into. The Telegram channel is we're going to share in the course of as we go on. We're going to share this the handle of the Telegram channel, so you can. It also has like a community where you basically can drop your own ideas as well, or contribute or comment, or if you have alternative scenario that you're looking at, you can also put it up as well. Okay, guys, without wasting a lot of time, let's begin to look at what this new week could potentially hold for us. So, if you can hear me properly and you're getting ready for us to get started, I want you to put in a comment. I can hear you. Let's get started in the comment section. So we basically breeze in and quickly begin to look at what um, assets can provide us opportunities. So you can just leave it in the comment section. There's a comment section in here you can leave it into and say, yes, I can hear you. Let's continue. Let's dive into it. All right? Just put it into the comment. I can hear you. Let's dive into it. All right? Okay. If you can, come on, guys. Waiting
yeah.
in
If
on
you
you.
can, if you can hear us, please let's see your
I want to be
comments. If you
sure
can
that
hear
because
us,
we had
yeah.
like some challenges with
Because yeah,
audio.
yesterday we were having
Yeah,
some
we had
technical
some challenges.
issues.
So I want to be sure that everyone can hear so that we can basically jump in and get started. So if you know you can hear me, there's a comment section in here. Just impute, I can hear you. Let's get started. All right? Or just, okay, fabulous, fabulous, fabulous. Fabulous. Let's get started. Okay, guys, let's get started. So, what we're going to be doing largely would be especially with the analysis the of our um, FX pairs and metals. We're largely going to be using price action. So multi time frame analysis where we begin from like we do a top down approach, look at the larger structure of the market. Please, if you can see my screen, please let me know you can see my screen. I'm currently screen sharing, so I believe you should be able to see it. So what we're gonna do here today, we'll look at a few currency pairs. So we're going to look at a few currency pairs. Then we'll look at some indices. Then we'll check out perhaps gold, and of course, we'll check out a few metals. All right. Okay. Wonderful. So
Yeah, and this place is a good
um,
place for you to also learn what we can actually teach you on the inside of Suavely also.
absolutely, absolutely. So for those folks who come through our programs, you understand that it's like a full-fledged program that delves into like goes into a number of areas. So multi-time frame analysis essentially basically you begin from the top and look at the larger structure of the market. You should be able to find the key reversal points, mark them out basically essentially in a way similar to where what I've marked out here. And if you did this for Euro USD, for instance, starting from the monthly, it becomes very apparent that the tops are falling here. Very easy to connect falling tops. And this is the macro structure of the market. This is like the biggest structure of the market. A lot of falling tops from the and it's of course, I mean, when you have falling tops, falling resistances, it's very easy for you to connect trend lines. And here we have essentially shown even more. Okay, we have the sort of downside trend line that basically shows more. Now, understanding your window by which you analyze the market is also critical. Our analysis, we're trying to do it in a way where we're looking at what's like most likely going to happen into the new week. So we essentially would want to zoom in after we understand the macro structure, where the last most recent basically key play of price was a key top here, a key top here, where and after that, we basically. But before going into that, one thing I think is essential is even though we've had like falling tops, yeah, it's not so difficult for us to also observe that we also had a behavior where like even though like tops were falling, the most recent, I'm sorry, bottoms were falling, the most recent bottom here kind of rose a little bit, which basically is and is something I should just basically take note of for the macro structure. So it's critical. So in terms of like key points where structure, the macro structure gets invalidated should price travel beyond here. Okay, that's so. But within these two levels of price, we begin to look at sort of like the sort of shorter term structure of price. Because essentially, what price is you have a number of different interplay, which is essentially why you have to be able to look at it from like different areas. You have the bigger picture, you have the sort of moderate on mid term picture, and then you have like the shorter term picture. Of course, everything depending on the window in which you use. So moving on, like let's so change drilling down a little bit into like the daily. It also gets clear that in the near-term structure, following structure around here, okay, we've been able to see, we can also see that near-term structure, especially from, say, from April, early on April, okay, or let's begin from here, from like late May, we've been having the structure of price such that um, tops are successively falling. Now, tops and bottoms from around this point have been successively falling. Now, this level here was a key structural level for price, and price broke that structure on the downside. This level could have held and essentially pushed up price, because what we had on the looking at the supports is you have this supports you have supports rising until this structure invalidated it. For those of us who know about price action, some of the sort of more general price action, you know that this counts as a double top, yeah, with a neckline around this particular area. A break of structure normally within a double top will see price on an average usually travel to at least the distance between the neckline and the top. Now, this is general. Now, but of course, we know that in terms of the behavior of price, price doesn't just go shoot down in a in one straight line. You usually have impulse correction movements along the way. So, looking at this sort of microstructure of price, as we drill down, okay, so as we drill down currently now on the 4 hours, which is most relevant for a weekly analysis, anyways. If you're on the 4 hours, when you basically use the period separator to separate, each of the every single place into like weekly. So last week, this shows last week behavior where price joining within this sort of microstructure, this smaller term structure, respecting successes. This is the trend line that I was telling you about. That we can see this particular trend line is where price structure was broken, which basically took price into like lower levels. And as you can see, after the break price, just to tell you how important that structure is, price came to touch that structure, couldn't break it, and for the last week we have had a continuation of the prior trend. Now, in terms of which phase we are currently in the market, are we in an impulse or corrective phase? Currently, relative to this structure of price, remember the journey. Price, remember the journey. Maybe if I have to go over it again, price, basically from the bigger picture, we are falling. So we have to look at the macro structure in the bigger picture. We have falling tops and falling bottoms up until around here, where we had a bottom that wasn't quite falling, rose above. Then when we drill down a little bit into like sort of like the medium term structure, medium term structure going into the daily, we're able to see that even though price was rising here, at this point there was a break of structure basically towards lower levels. Now, the question about whether or not this structure is fully fulfilled as it goes is what we will be looking at into the new week. Putting it on the 4 hours, we can see that price tested that key level, okay, the neckline level, and then began. So, if we are to assume a continuation of impulse corrective moves, now we are on the shorter time frame. Okay, if we are to assume a continuation of this move, then one of the things we want to see is we want to see. So I just drew like a Fibonacci from this level, this neckline level all the way to where price currently is, and then we now have to ask the question of, okay, considering that this is an impulse, we understand that in every impulse move, or like a good percentage of impulse moves, will usually allow for some correction. So, in terms of looking for opportunity, my preference is to identify another key level here, okay, and perhaps join up into a downside if price corrects to that key level. I think that a 38.2 or a 50 period correction of this feed might be a good idea to begin to do that. Let's see what that could potentially look like. What areas of price that likely would be. Okay, so we're looking at if it's the 50th level. Okay, so let's look at the 38.2 level because it's interesting because that level also coincides with the key support level. All right. So what does that look like? So that looks something around here. Let me put up the horizontal line around here. So we're looking at around 1540, 1536, 1540, kind of 1530, 1535 to 1540. Okay, if we see during the week some form of correction of price to this level, okay, I would find it significantly more interesting. Okay, so patience is always important. So I would think that I would want to see price decline a little bit, then join the fray in continuation. Now, where's the potential? So, in terms of structure, we're looking at potential goes all the way to this level here. All right. So we're looking at all the way down here to what is this? 1166. So maybe it might not fulfill itself during the week, but that's a significant potential maybe into like the weeks to come. All right. Now, but in order for us to obtain that confidence, I prefer to see that price discount itself from the current impulse. This is an impulse right here. I want to see price discount itself. So I'll be looking at getting orders from around here, okay, properly discounted, stops above. You can look for a comfortable place to look for stops there. Now, this is one scenario of price. Now, what could invalidate this? What are the things what are the levels that could invalidate this scenario? Without a doubt, this scenario gets invalidated. Okay, if price, um, yeah. So this scenario gets invalidated if price seeks anything higher than this level here. Okay, I do not need to tell you that in terms of risk management, you've got to get an ironclad risk management. Make sure that whatever the pips of this trade or some of the opportunities that we're looking at, you should do appropriate position sizing. What do I mean by position sizing? Make sure that whatever the percentage of that is relative to your account size, is only a manageable portion. We're looking to take opportunity, but we're not looking to, take opportunity unreasonably in such a way that it endangers. There are a number of options here for where you can take. So I hope you guys are following me. Now, if you're following me, let me just stop sharing for a little bit. And if I know that you're following me, okay, fabulous, fabulous, fabulous. Thanks, Elijah.
Yeah,
Uh, thanks, Elijah. So I can see that we're following here. Okay. All right, wonderful. So we're basically just getting that's Euro USD looking for a bit of a bit of a decline, so that we can get better entry opportunities. We are currently in an impulse environment. We've looked at the macro structure. Let me tell you guys, there's nothing better than um, having the ability to look at the macro structure of price, then drill down, look at the shorter term movements, identify best entry. It is not about looking at the chart and saying, you know what, this is where I'm going to enter immediately. No. As a trader, one of the key things that you want to develop is the ability to be patient so that price sufficiently gets into either demand or supply area relative to the macro structure. Okay. So let's quickly look at something else. All right. Guys, do you have any ideas of what you think that we should look at? If you have ideas, we can quickly turn it in there and take a look at that asset. But I want us to basically touch. I want us to touch currencies. Then let's look at maybe some indices. Then let's look at metals. Joshua is already going to share with us thoughts on platinum. Joshua, right?
yeah,
We're looking
platinum,
at platinum, yeah.
platinum. Yeah, we're looking at platinum.
Okay, we're looking at platinum. Okay, so let's go, let's go, guys, let's go. If you have any ideas, you think that any other asset you think that we should be sharing, I can see that you guys are with me and following me. So let's continue. Okay, so guys, that's into the new week. Remember, when you take your analysis from the bigger time, all right, when you're in the shorter time, and when you go to the shorter time, you should make the analysis relevant, okay, for the shorter time. One of the challenges is of multi-time frame analysis. If you're just basically too big and it's too far off, your analysis is too zoomed out. You're not, it might not end up being super relevant. So we're looking into the week. So which is why because I'm looking at the swing behavior of price, I end my view H4 maximum H1, not more than H1. Okay, should we look at GU? All right, let's look at GU quickly. Aha, once again here we begin from the higher structure. We have we have macro structure. This is rather very clear. Okay, of course, when you look at it from the very top, you have falling tops, right? You have falling tops. Aha, basically falling tops. But most recently, most important, most recent. So we have falling tops. Then you had war prices around this region, where basically bottoms failed to fall, which created a new dynamic in between these two levels. So these two levels, basically want to observe like the dynamic in between the levels, descend a little bit down to the lower time frames and begin to start to understand what is going on here. So between these key levels, clearly, whatever price does above any breakouts of up or down of these levels is a is an indication of continuation, okay, either on the upside or downside. But that's macro. That's like very macro. So what you want to do is you want to get down closer to the price action, see what's going on. Price is currently at 34, about 3400, something like that. All right. So what are we seeing? Most recent behavior of price. Not very difficult for you to be able to connect the dots here. Okay, with trend lines falling. Okay. Now this is rather easy. But when you look at the price action, the price action, you realize that we're able to get this level prior key um, prior key level, okay, that travels from history into currently where, of course, you can see that these were key sharp turn levels for price, sharp turn level, and around sharp turn level as well, that travels into where current price action is. What does that tell you? What does that tell you, guys? It tells you that this level should have been important, we would have looked around price, how price behaved here. Price has broken through it somewhat, but the question about whether or not this is a pure break or a fake break is also something we need to look at. But when you're looking at the near-term structure, okay, you are tempted. We are tempted to look at the fact that price will still continue to travel within this what looks like not fully a downside channel, maybe something like a wedge, a falling wedge. Looks something like a falling wedge. Price, the principle of falling wedges is price continues within the wedge. Okay, so traveling within the wedge like a flow of water. Um, then breakouts on whichever side of the wedge usually determines the future movement. So basically, again here we are. It's not entirely surprising because there's a lot of correlation between Euro USD and GBP USD analysis. Clearly, because the USD is on the counter side of both currencies. So we're looking at, will price respect these boundaries and travel in? Okay, will price respect these boundaries and travel again? Here again, you want to, if you want to, if we're looking at these boundaries, and if price were to respect it, one of the things you might want to know is to what degree of correction should price respect this level can you anticipate. All right. Another key thing I think you might want to take cognizance of this level. uh, okay, here now, why is this level important? Two reasons in my view. I think that first, historically, there was a sharp turnaround here. If you go into the 4 hours, it becomes a bit clearer. Sharp turnaround here. And another thing is that from the swing guide, the last main, this is the last, this region around here is the last main. Uh, I think I should draw this better. This region around here, okay, is the last main sharp turn area of price. Basically, the last main key relevant peak in the journey of price within the falling wedge. Now, what does this tell you? So we pick this level, trying to identify should price be seeking to correct itself within this sort of downside. Where are the levels? This swing high to swing low on the Fibonacci. This is around the 50th level, and this level was also a sharp turn area. You know what I mean? So you begin to ask yourself if you want to, if you so shorter term trades, in terms of shorter term trades, okay, of course you have to look at managing risk appropriately. You might want to give a little bit of room, trade within this area, or if you're more patient, if you're more patient, and of course the invalidation of that before we talk about the if you are more patient, the invalidation of that is if price travels significantly below. Okay, there are still opportunities for price to travel significantly below, but in recent structure, price is currently in and around what appears to be very closely related to an impulse move. So except price now basically gathers a lot of momentum, you expect some decline after, what is this, let's put it on the 4 hours so we know how many weeks this is. After 1, 2, 3 weeks, okay, of essentially declining, and we've basically seen that these levels are around the levels. So basically, what are the potential shorter term trades might be to trade within this level, okay, with stops below, okay, or alternatively wait for price to advance, okay, pick out a better entry. That is always my preference, the one where you wait and pick out better entries. Of course, you got to decide whether what kind of trader you are. Are you a short-term trader? Are you a swing trader? To what degree of weight can you wait? If you're looking for short intraday opportunities, then you might want to consider that. Okay. So watch the levels. Watch the levels. I think we're gonna have a group where we can do a screenshot of this, or you can replicate this as you go along as you're looking into the price. Okay. You can also send in alternative scenarios if you have a view that differs from this. Guys, how many of you guys have been watching US 30? There are some assets that have just essentially been printing money. Let me stop sharing so I can look at your faces if it's possible. Some assets have basically just been printing money. Okay, I'm actually the last chart that I shared, because I can see that you're asking which one. The last chart I shared was the chart of GPB The first chart was Euro USD. The last chart was GPB Okay, thanks Elijah. Um, Basically, let's go get the money. So, what are we looking at? Right. So let me share this. I think that for those of you guys who do not at all look at, like you don't at all look at indices, I think you'll be losing a lot. There's a lot of symmetrical movement that you see in certain kinds of indices. In the last, what is this? Last year thereabout, there's been, that thing where everybody says trend is your friend, where basically you're able to, I mean, the simplest way in making money is to find a trend, basically ride that trend. So checking this out, this has been, it doesn't get much more linear than this. I remember that even earlier on, we always used to look at this asset, you know what I mean? So if you're looking at the asset again, you can see very linear trend, but you should recognize that this is on the impulse leg. You want to make sure that um, basically you want to identify a key level here where, if you have some kind of decline, all right, you should have some kind of decline too. All right, guys. Okay, so let's pick. Uh, Not quite sure. Okay. Aha. So I think this is rather clear. You can see. Uh, I don't know. You can choose this. Yeah. Aha. So I think basically it's already visual enough, okay, but this is just trying to make it, and of course you can do this all the way down here, rather very visual. You can see the bottoms, and if I wanted to do this for the tops rising as well, okay, basically very linear trend. This is what you have anyway in any asset that is trending, okay, but the question is not about the trending. You want to make sure that you're not entering on an impulse where price is overextended. Okay, currently right now from here all the way up, this is an impulse, okay. In trends you're advised to buy deep, right? Buy the deep. So basically I always prefer for some kind of discount of an impulse, in order to get into a better demand area. Okay, not saying that you can't have opportunities for price to continue to ascend, but in trading you basically are looking for what works most likely. Like you're like, what will where will price most likely be? You want to increase on a percentage basis the accuracy, the probability. It's not like you can't take the
Exactly.
trade, like, you basically want to do that. Joshua, you said something, right?
No, no, I was just agreeing with what you're saying. So
Yeah, so
true.
it's not like, I mean, this is clearly an uptrend, but this waiting for price to discount for me, trust me, I always like, it's a bit more cautious. You might even lose some trades, some opportunities along the way, but that's not what's most important. Your money is within your account. You can always, take more. So I prefer that. So essentially that's why I'm looking at price. So several ways you can do seek a discount of price. One simple way is to look at the next key level. You can look at the next key resistance level, okay, around the journey of price, make that a minimum discount of price. Or you can take a FIBO from current level, okay. You notice I use a lot of FIBO and look for between a 38.2 thereabout discount. As you can see, it's not too far away, or 50th level. So it depends on how the degree of how conservative you are. If you go into the smaller term structure, you would find as you go into it that, of course, this is the impulse move. Price has been rising in the impulse move, okay, and then we've been seeing some kind of correction, blah blah blah, like that. But the shorter term structure is also interesting because um, because it now gives you a sense of, okay, will 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 price deep all the way to some of those levels. Already here we are seeing, what are we seeing here? We can see um, falling tops. This is shorter term structure now. This is the 1 hour falling tops, falling tops. Okay, now this should be interesting. The mere fact that we're having this was what happened on Friday. Price, okay, basically came to test the prior key structure. What happens after this area should be interesting. Should price be able to sufficiently, this is the shorter term structure, take out this, I mean, perhaps be looking to take out this, you probably want to say, you know what, price is probably not going to decline all the way down here anymore. I'm going to look for an opportunity to join. Means that the momentum is still on the upside. But what happens here, if price comes correct and takes out this level, price is probably going to look for shorter, lower levels. Okay, so it gives you a confidence that, you know what, um, I could probably still wait. Or if you're a shorter term trader, you can take short term opportunity. Understand, because the question always, a lot of people always say, you know what, am I buying or selling? That's a very simplistic question. It depends on where. Okay, it depends on what kind of trader you are. For instance, in this example, a shorter term trader, okay, let me give you this example now. A shorter term trader, uh, a longer term trader, which I am by the way, can comfortably decide to wait for a decline of price up to the 50th level and join a potential buy if all things look good. Okay, but the shorter term trader can trade from where price, look at where price is now. It's not even at the 23.6 level. Can trade if it sees a breakout on the downside here, all the way down to that level, whilst somebody else is still waiting. So it's not a case of buy or sell. It's a case of, when you're waiting, somebody else might be in a trade, towards the point you're waiting, and stuff like that. And then you must always know how to find valid and invalid scenarios. What invalidates your own um, point of analysis. Give you an example. If price travels beyond here and seeks to break here, it invalidates the downside scenario. So you now have, so these two levels are now the key levels you basically watch out for. Take your horizontal line, plug it there. Take the next horizontal line, plug it there. So you can basically look at those key levels. These are like brackets for price. Now, for a longer term trader, you're basically watching as things go on, watching what, if price is actually going to correct some reasonable degree of this prior uptrend. Okay, it's not a case of either or it's more a case of which one are you and which one are you taking. I honestly hope that you understand. We deal a lot with multi-time frame analysis because a lot of the problem, in fact, I think that probably multi-time frame analysis is the the singular most important thing that you need to probably harness. I speak about this a lot in our trainings, in our mentorships. I don't think people really understand it to the degree they don't understand how to apply it. A lot of people don't really understand how to apply it, but really central understanding of this put context into your analysis. So you're not just, oh, buy or sell. You are more like, you know what, where am I within this? Okay. So we've marked out the key levels. What are we going to be watching out for? So we're watching out for price around 36, 36.15, and price around well, 35.95, no, 35.90, right? Yeah, 35.90 there about. Okay, so right, Joshua, are you ready? Do you want to share about platinum? Are you ready right now?
Oh yeah, yeah, no problem. Sure.
All right, so go ahead and share about platinum. Tell us your thoughts on that. Then I will continue. I'll basically continue with. I'll continue with. I'm going to see if I can touch on. I want us to touch on gold and basically see
Okay.
where we might find opportunity there. All right, go ahead, please.
So okay, I have to share my screen. All right. Yeah. Yeah, you can see my screen. You can see my screen. Let me know.
Yep, 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 yep.
Okay. So, all right. So, platinum has been lagging major precious metals. So that's the idea behind this trade. So, in terms of technical analysis, I will say what I kind of understand about it now. So, this chart is currently we're looking at this silver. So,
Mm,
I've been long silver for some time now since we got to this price,
mm,
and silver has been doing well as gold, but I also think they will continue to do well. But where I think the main money might be would be platinum, because this has not really moved. But right now, it is setting up for a strong momentum,
mm.
because if we notice, there was a big drawdown, even turning into something of a bear market.
Yeah.
But
We can see like the
with
highs are falling clearly, the tops are
yeah,
falling.
so
Yeah. So
the
and then we can see some kind of a confluence around where you have the mouse in there, in and around there.
exactly, and the stuff is now so far from the moving average that one of the
That's
system
the
I like to
200
trade
moving
before.
average, by the way. I think you need to state which of the moving
Yeah,
average.
that's the 200
That's the
day, the
200
200
day
day moving
moving average.
average. Simple
Price is
moving average,
currently
by
on
the
the
way.
daily
Yeah.
time frame. Yeah.
So
Mm,
price is now so stretched out from the 200 day moving average so
mm,
down, and usually that calls for what you call a mean reversion type of trade. So this is a mean
mm,
reversion trade,
mm,
and given that gold and silver has been moving, so if we look at the precious, I have some chart now. So the precious metal index somewhat similar. I don't know if I can get that up now since I've misplaced it. But anyways, so
okay.
this is a platinum chart. So there's this
Mm.
indicator known as the price oscillator.
Price per
Okay, PPO. So
price
you can
percentage
get it if you
oscillator.
want on the Trading View platform.
Mm-hmm.
So what it's telling us now is that price, as in comparison to where price is to the moving average, price is around minus 15%
Mm.
down of the moving average. So with the last time price got to those type of levels, we're seeing that corrections were made. We're seeing corrections. So this, because this is not this is a lot more of a linear chart. So but if we
Mm.
have like a log chart, I think I can set
Mm.
that up to be log. Uh, so let's set it to be a log scale. So now we've set our chart to be a log scale. So if we go back in time, you can see when price got to the level down currently in the area where it is now, we saw something of what we are about, what we might see now. Not necessarily a big bullish trend, but we might see something what you call a mean reversion trade. This type of position whereby price will start to reverse back to the moving average. So
Mm.
that's the kind of the sweet spot I'm kind of looking at now. Given the
Mm.
fact that we've seen on gold and silver, you can see over the past few days, silver has been doing well. Far of it's made an higher high, higher lows, higher high. So that's something to commend. Although it's not uh, sticking on the 200-day moving average. Why gold on
Mm.
itself has blasted through the 200-day moving average, so stretched out now.
Mm. Mm.
However, platinum seems to be sluggish for a while, but now we're seeing a form of a breakout from this mini triangle here.
Mm.
And one good momentum indicator I like to use for cashing in the momentum is the stochastic. This
Mm.
stochastic now is not giving me a bullish sign, a bullish, uh, more like a bullish momentum coming soon.
Mm.
So I like to call it that way. So that's just my technique. So if I get this type of signal, it's only
Mhm.
sensing to me that something is coming, especially with what I've been seeing in other precious metal. maybe the guys who have been buying gold and be buying silver, they might feel like, okay, um,
So you think that
it's
is a
time.
movement of
It's
volume
also,
and momentum towards,
yeah. So they
yeah.
might start saying, okay, maybe we've missed some
Mm,
part of this thing, but something has not
mm,
yet moved, which
mm,
is platinum. So
mm.
if gold and silver has been moving for the past weeks, and platinum had not yet moved, and we're not seeing this type of bullish candle closing on Friday, and a bullish momentum sense coming on, given the fact
I think
that
I
we
think
are
I think
not
I think one of the things that would be very helpful as we sort of really investigate this and try to take the opportunity would be maybe later
yeah,
on we can do this privately, and guys, you guys can only have access to it if you're within our community. We're going to look at the degree of correlation that traditionally platinum has had with some of the other precious metals we are doing.
exactly,
I think
because
that could help us. But we're not going to do that here because this is not the platform. We just share a couple of opportunities here. Okay, we're already like 40 minutes, which is not the plan. We should have like this should just be 30 minutes. We should be able to just do this, breeze in, touch on some of those assets, share where some of those opportunities are, and basically move. But we will check that. Correlation helps us to get a sense of, because we're talking about those movements in line with gold, in line with silver, then since we already have those tools to be able to do those correlation checks, it gives us additional confidence. Please go ahead, Joshua.
oh yeah. So we're what they call being in the buy zone in terms of the mean reversion system I'm trying
Mm,
to put on the
mm,
signal.
mm,
So if we remain in this zone, I'm still quite short term bullish. Although it's
mm.
generally price looks bearish, but because it has stretched so far from its 200-day moving average,
Yeah,
there's likely to be what we mean reversion. So
yeah,
price does not go so parabolic down or up.
absolutely,
There, there's
absolutely,
a there, there's
absolutely,
some form of swing. Yeah.
absolutely.
So that swing
Impulse
up,
correction movement, basically.
exactly. That's what we call it
So
inside
we're,
on
we're
Suavally.
currently like, yeah. So,
So
so yeah. Mm,
if we see that this this bullish signal I'm getting now, yeah, especially with the
mm,
breakout, I'm so confident of it. And also another reason why I'm confident, if you have watched or follow me before in the past, I'm so much into this the average true range in terms of volatility. So
yeah.
why I look at the 15-day average true range compared to the present average true range. So we look at it at the
Mm,
monthly level. So you can see
mm,
on the monthly level, average true range is reading 353.9,
mhm, mhm,
but that is for the last 15 months. But on the current
mm.
month, we've only moved about 1.439. So let's just say 1.44.
Means
So
if we did the math of
that's
this,
telling us
this is
that there's room.
less than 40% of
Exactly. So
less
that's
than
telling us
40%
there's
move.
still
Yeah.
room for price to move.
Mm,
Yeah. So that's telling us that up or down, there's still room for price to move.
yeah.
So given the fact that there's still room for price to move, that's a good thing. So we can be confident that okay, maybe this thing can actually come true. Yes,
Mhm,
because platinum has not moved compared to its last 15 months movements.
mm,
So this month
mm.
there's still room for platinum to move
Yeah.
somewhere.
Yeah.
So
Absolutely.
that's one confidence I have for this trade again.
Okay.
And another thing I'll look at is the futures market, where we look at the commitment of trader
Yeah.
report.
COT report. Yeah.
So exactly. So although I
By
want
the
to look at
way,
the report, I'll look at the stats of
we
the
do
report.
share the COT report. We have a session of the COT report on our mentorship program.
Yeah,
And the session is usually recorded. So this is both for our mentees in terms of people who have gone through our mentorship program, and even for the people who have not. Um,
oh yeah,
for our mentees, of course, you have recorded sessions of the COTI. If just in case you've not been using it, you want to go back there and check it out. Very important report, very useful for gauging trader sentiment and gauging the bias of
exactly,
not just
exactly,
individual but institutional traders who are on the
exactly.
institutional side. Very useful. Please
So
go ahead.
Basically, this report just tells us where the big traders are positioned and where the edges are positioned. So the green line you are seeing is for the big traders, while the blue line is for the edges, meaning corporates like um,
Yeah.
multinational companies and all that.
Mm-hmm.
So the red line is basically retail small business traders.
Mm-hmm.
So one way I like to use the CO2 is to I use it the way I use the PPO,
Yeah.
where we look at, okay, how is the market priced compared to before. So
Mm.
now the it seems like the hedge fund and the big traders are bullish, but how bullish
Mm.
are they? If they are extremely bullish, which on this line on the where I've drawn it, I
Mm-hmm.
already plotted
Mm-hmm.
everything here. If they are
Mm-hmm.
extremely bullish, we want to be careful, because if everybody has bought, who will be the next
Yes.
person to buy? Who is the
Exactly.
next money to buy? So
Exactly.
that's where we have to be
Mm-hmm.
careful. But right now, what we are seeing is that they've been cutting their positions for a while, but right now they started pumping money in again, but they are not so extreme. Rather, they are just there. Although I would have wished they are more down here, but they are still in a level where I'm comfortable that okay, there's still room they could continue to buy. But if we see this green line getting to
Mm-hmm.
above 46 million, and
Mm.
over time on average, that has been where we think platinum market has stretched for big
Mm.
traders. You don't want to put your money there again, because you'll be buying where they will start selling.
Mm.
So and now we see that okay, now they seems to be in an area that is not so stretched. So it makes
Mm.
sense for us to say, okay, yes, we can buy platinum tomorrow morning, or
Mm.
maybe this night. I probably will get into the position this evening. So
Mm.
that's the idea.
Mm.
That's the idea, because platinum has not moved, gold has
Mm.
moved, silver has moved. I've been on silver.
Mm.
Mr. Samarash is on this call. I've been preaching silver for her when we did, especially I've been talking to her for a while. So, but platinum has not moved, but I think it's ready to move. Likely,
Mm.
it's
Exactly.
going to move, but there's also this is a business of probabilities. It may not also. So it's not like I'm telling you that this must happen, but
Absolutely.
I'm telling you what
So,
is
so in
likely
summary,
going to happen.
what we look at is we look at all indications of opportunity,
Yeah.
all indications of opportunity, and we try to take those opportunities. So, I think it's good for us to just quickly talk about an alternative scenario, which will now form where exits could be. Do you
Exactly.
understand? So, what will be the alternative scenario of this analysis?
So this analysis, if I'm saying okay, maybe this stuff wouldn't work. My first
Point of
idea, first of all, would be my stop loss. So my stop loss will
yeah,
usually be based off the ATRO times two. This 15 ATRO times two. So if I'm to do that now, let
yeah,
me see. Um,
that's going to be
uh,
about close to 150. Yeah, that's about this is about 75. Yeah,
yeah. So
close to 150.
let's see if I can
Okay.
get the calculation quickly on my phone. 73.48 times two. So it will be divided by 0.01. So that would be like okay, about
And for the
14.
record, guys, this is
Yeah,
15 period ATR. So just in case you're wondering, 15 period. 15 day. Beg your pardon. The period being
yeah,
on
the
the day.
15-day ATR.
Yeah.
So my stop will usually maybe it will be around let's see, bring this stuff up, drag it. I can
Okay.
say okay, maybe yeah, yeah, this will be around where my stop will be, below
Mm,
this level.
yeah.
So my stop will be around there.
Okay.
My
So
main
it's usually good.
stop.
Yeah. Fabulous. So I mean, technically, absolutely. I think this is fabulous. I mean, even continues to be consistent with
So if our stop is doing
um,
there, I think we can get at least a 1 to 2 ratio trade, maybe, or 1 to 1. So this will be our first major roadblock, I think. If we cross here, the
Yeah.
trade could still get to this level. So yeah.
Yeah. Can you please go to the weekly? Let's just quickly look at what the weekly looks like in terms of looking
Okay.
at the long term potential of the asset.
Yeah.
Okay. All right. Interesting. All right. This is 8:53. This session should be 30 minutes or 40 minutes at the most. Guys, we appreciate you tuning in. And for those of you who are going to watch us later on, fabulous. Let's get in your comments. Let's observe some of these assets. We're always constrained for time. Joshua, I appreciate it. I appreciate the analysis. I think very good analysis, taking us through a number of um, um, various tools that we can use along the process of analyzing. Clearly, we spoke about PPO. Clearly, we spoke about the COT reports, and clearly we did some price action. All of that towards getting to know where is the opportunity. Ultimately, guys, I'm going to
Exactly.
leave you with this. I'm going to leave you with this. You are not a trader if you don't understand risk management. You're a gambler. So you have to know what you're doing in terms of when you're taking opportunities. It's not enough for you to take opportunity. You must be able to, number one, quantify the risk of your um, the opportunity you're taking. So even though you get stops, it's your duty to do what you call position sizing. Size your position so that the total percentage of risk that you have. From all of us here at Suavally, I wish I could go on. It's always exciting getting this type of sessions. I love it when we have a community of traders to talk to. But for myself and also Joshua, go ahead and say your bye byes from Joshua as
Oh
well.
yeah, everyone. Good night. Have a nice rest. Good trading
Right, and
week
I
also.
wish you, I wish you, please still take your time to look at a number of other assets. There are a lot of opportunities, but we're constrained for time. I wish you a great trading week. Getting the money, getting the pips, get that money, guys. From us here, bye for now.
Bye.